Good afternoon. This is Tom Ashby with the Viper Report. It's Thursday afternoon. Just as the market's closing, once again stocks opened sharply higher, with Dow up about 400. Early trading, going into the close, it's up less than 200. S&P, same sort of thing, was up 40 points and now has sagged into the close. In last week's article for Forbes.com, I discussed the reversal last week in the S&P and what that might mean for the market. This weekly chart of the S&P was featured in there. You can see we made a sharp new high but then closed lower. That's never a good sign. The week's not over yet, but you can see that the advanced decline line, the weekly, is still negative. On-balance volume had already turned down. Depending on how we close this week, it could drop further. Oftentimes, the on-balance volume will lead prices lower. That's generally not a good sign. There's been a continued divergence in the market. The NASDAQ, and particularly the NASDAQ 100, this QQQ, has made another new high this week, continues to move sharply higher. That's in green. You can see below that in red is the S&P. It made a high last week and has not exceeded those highs this week. So that's another divergence. S&P 500 obviously has 500 stocks and many more large companies. QQQ is mainly technology and biotech. Below that we have the XLF, which is the financial stocks. Look how bad it looks. It's been, lagging the market for quite a while and is one of the several reasons I think this rally ultimately will fail. But at this stage, there's no signs yet it's over. One of the things I've been discussing for a while is the fact that as the QQQ has moved higher, the volume has moved lower. That's not a healthy technical sign. And if we do see a sharp down day, if the volume expands on that down day, that'll confirm this view. This chart is as of the 1st, and it shows that the OBV had dropped below its moving average at that point. It's back above it today. But still, the QQQ is the main bright spot in the market. And unfortunately, most 401ks, most ETFs do not have the same makeup as the QQQ. If you look at the technical in the SPX, that's the S&P 500, you can see we've had a nice uptrend from the March lows. But in the past couple of weeks, you can see the MACD histogram, an indicator that I actually developed ages ago, has been forming lower highs and is close to turning negative. That's not a great sign. Volume has not been leading prices. It's been lagging. You can see this flat line in the OBV when the market has turned lower. And then today, up through the close to the close, it looks like it's going to form a doji. So if we get a close below Wednesday's low, that's going to be a short-term sell signal. Some of the big banks look the worst, like the XLF. This is Wells Fargo. You can see that it's just closed just barely above the worst levels in March. And if you look at this formation, you'll see a triangle or a flag formation, typical, as I mentioned in my articles, of a bear market rally, and it's already dropped below support. That indicates that the financial stocks are likely to lead the market lower. There are a number of stocks that are sharply lower. One, PayPal, up 13% today, missed on earnings, missed on revenues, and even though I'm a client of PayPal, I wouldn't be buying it up in here. And many people are thinking that the worst to the economy is over. I hope they're right, and I hope, more importantly, that the worst of the virus is over. But I'm not yet convinced. And I think a very cautious or bearish outlook is preferred. So we're long an inverse ETF in the Viper ETF report, and we're short a bunch of stocks, with clear risk controls. So, if we're wrong, we lose 5% or less. And if we're right, we can benefit if the market does decline. I think this is a time to be protecting your capital, not buying some of the few high-flying stocks when the majority are negative. If you want specific advice, you can go to viperreport.com. You can read my articles. If you want a training, you can read about my special offer for traders and investors. Or if you want ETF advice, click on the Viper ETF report or the Hot Stocks report. Each is $34.95 a month. You get at least 2 reports a week. Lately it's been daily. And of course it's paid through PayPal, so maybe it'll help boost that stock price. Well, hope you have a great rest of the week. Jobs report tomorrow may get ugly. Hopefully not, but it can't be good. So we'll try to touch base with you either over the weekend or early part of next week. Thank you.